Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, September the 13th, 2012. As you guys probably already know, the Fed came out with QE3 today, basically announced that, and it did it a little bit differently. I want to take a moment to explain this to you guys. We had QE1, and then we had QE2, and then we had Operation Twist, and you will notice that we actually started to contract again. Our economy started to get hurt again. We're starting to see our employment numbers go down, and so forth and so on. And we're seeing the same thing in Europe and so forth and so on. So the ECB, they came out and they said, okay, we're going to do a basically quantitative easing of our own, and then the Fed came out and said we're going to do the same thing. Well timed, because they're both doing it together. However, they made a slight difference between QE3 and QE1 and 2. This time it's open-ended, meaning that there's no limit on the amount of money that they will spend on this, nor is there a time limit for how long this will go on. They've basically just pulled out all the stops. The Fed also said they will continue Operation Twist. So this is them giving both barrels to the market. Everything they've got, they're throwing at it. And that's something that's really important. Number one, it's going to cause your markets to rally, which we're already seeing. We've already been betting on that going to happen, and so now we're just making money on the trade. And I'll show you guys what I'm going to do with that in a moment. But you're also setting up a scenario where the Fed is saying this is everything we've got that they're throwing at the market. And you know that because they're just repeating what they've done before. They're just doing it to more extreme measures. So if they had something else, they would be using something else. They're using everything they've got. So now, looking at that, and if I see the market right now, and we're going to start to rally, and that's fine. Short term, I see the market is having, this rally is having legs to the upside. That's fine. However, if we start to see the markets failing again, if we start to see the economy shrinking again, and so on, and this isn't working, they're going to lose credibility with investors. Investors are going to say, wait a minute, you've thrown everything that you had at it, and it doesn't stop it. It still wants to contract. Then you're going to have a major problem. So until that happens, we will play the trend that we have, and that's up. But there is something to think about. Put in the back of your mind that if this thing starts to fall apart again, if the wheels come off the train, then there's going to be a problem, and a big one. Right now, I see a major move to the upside, and you want to get involved in that. And that's how we're going to be talking today, is how to get involved in that. If you want, you can practice your own technical analysis skills by going to our free website at PerfectStockAlert.com. It's right there, and you will find all of my charts, my own personal charts, on the website there under the markets section, under chart notes. Those are my personal notes. They are updated every single day. If you want to get better at what you do, go there, look at the charts, and you can figure out for yourself. You should be able to figure out which chart that I like, as well as which one you like, and then you should basically practice your skill set before you watch this video. Then you would know, hey, I'm getting better, or hey, wait a minute, Christian saw something I didn't see, or man, Christian really lost it today, or whatever. But now I'm going to be looking at the Dow Jones Industrial Average. We're going to be looking at the U.S. markets today simply because the Fed's already basically played here, so we'll be looking at these right now. Now, right now, we'll point out that we told you to go long on this day, and we told you that intraday activity on the website, so people could have taken advantage of that. And the next day, of course, you get a massive move to the upside here. That was, of course, from the Germany's announcement there. Then we have a nice little move continuing to go to the upside. And you'll notice now we've had the Fed big move here. Okay, that's great. I took the stop that was way over here and just advanced it to here. Remember before I was telling you this over here was the floor set in, when the ECB just put in the floor in the market. Okay, well now the Fed just came in and put in a floor in the market as well, right here. You'll notice this previous resistance point is now where that floor is at. So when you're looking at this move here and you're saying, man, she's well overextended, I don't think I can buy into this situation, you're not really that overextended, not even by a long shot. I would actually have been buying intraday today if we're sitting on the sidelines waiting for the Fed announcement. Well, the news came out, you were probably buying. That's good for you. I've advanced my stop. I'll continue to move to the upside, and eventually I will be stopped out, and then I will look for another opportunity to go long again. Why? Because we're in an uptrend, and that's what you do. Okay, now we're going to be taking a moment to look at the NASDAQ, and this is the one that actually, in case you haven't figured it out right there, I actually would be buying this one. Of all the averages that are out there that I'm looking at today, this is the one that I've marked on the chart for clearly defined as a buy signal, and for multiple reasons. Number one, you had this previous resistance point that you had going on right here. You kept hitting up against it and falling away from it again and again and again. Then you finally broke out of that, closing above that point. then you rally up here and you consolidate. This was very telltale in the fact that when you consolidate like this, you're forming a very bullish chart pattern. Typically this is the middle move, so you take this distance and you say, okay, well that's the distance of the first leg, the second leg will be equal, therefore that's our distance that we have to go to the upside. Okay, that's what we're looking at here, and it's exactly what's happening. We told you, however, in this case I wouldn't buy it until she broke out, and that's when that happened there, so you could have bought it intraday or however you did. Then we also told you that it's likely, in some cases, you will get a pullback, low volume pullback, down to the previous resistance, which is then going to be acting as support. We told you you'd probably only get that for a couple of days before she reversed back to the upside, and you probably wouldn't get a hammer candlestick formation on that. Well, in this particular case, you did. It didn't happen on all the charts, but it did on this chart, and that's why this is the one I'm buying, because it follows the formula that I like. So anyway, that's what I would be buying here. Also, it's a very bullish chart pattern. Again, I like that. Nice increased volume on the breakouts, all that stuff. Everything is right the way I would prefer it. Also, let me clean that up a little bit so we can see this. You'll notice that this is where the stop used to be, down here. Now I have advanced the stop to this point, which is exactly where you would set your stop if you were going to use this as a buy signal anyway. So yeah, that's all I'm doing, is advancing the stop and saying, hey, there's also a buy signal there for you guys that want it. One other little oddball chart for you guys. I've advanced the stop on the XOI oil index as well. We're just locking in gains as we go. And there's actually several charts that I've updated on the website perfectstockalert.com indicating that I've advanced the stops on them. So you can check them out for yourself there. And we'll go on and look at a couple more charts. The Russell 2000 Small Cap Index, this is actually a great trade for us. So we talked about this one a couple weeks back several times, and we had this high point here, comes to a resistance point, and she starts to form this little cup situation here. It's a very bullish chart pattern. Again, I'm thinking to myself, wait a minute, we're getting a bullish chart pattern on the NASDAQ, we're getting a bullish chart pattern on the Russell, and these aren't typical in a bearish market. So if you see them setting up, it's telling you something. And it was, of course, telling us that we were preparing to break out. When we started to get this little formation here, we said once she closes above this little trend line right here, that's your buy signal. Happened right there. That was your buy signal. Next day gave you another opportunity, and she is off to the races. We have advanced the stop from this point here all the way up to this point here, just locking in a gain. We want to keep a little bit of distance between us and the actual price activity. We want to do that on all of our charts, actually, because we want to let this continue to run to the upside. We told you at the start of this, actually before she even broke out, that you will be able to take this actual chart pattern and measure the distance from the actual resistance point down to the lowest point, and then measure that out mathematically, and from the breakout point add that, and you'll get an idea of how high you can go before you get to a resistance point, or your next hesitation point or pivot point, or whatever you want to call it. So basically that's what we're looking at, and it's actually proving itself to be absolutely accurate. Very good. Congratulations to everybody who's making money on that trade. The S&P 500 Large Cap Index, this one was very nice as well. Same basic overall scenario. We had a nice uptrend going on for a while here. And then we got into this funky little pattern where we started to consolidate to the downside in a very well tight pattern. We told you when you broke out of that, that was your buy signal. It happened, you bought it, and she's moved to the upside. We've taken the stop that was here and we've advanced it to here. We actually eliminated all risk, and when she continues to move to the upside, we'll start advancing it and locking in gains. So right now we just eliminated risk, and we have a very small gain right there, but just eliminate risk. That's all you should be doing right now, letting the market move to the upside, follow it, eliminate risk, and look for an opportunity to get long. If you haven't already got one, you should be looking for them. Okay? Now you know. If you've not been to the free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I will see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.